Hi guys, how are you doing in this rainy, not rainy, sunny, not sunny March 2025? I hope you're doing well. Welcome to Nguna Esther. Welcome to another video where you get to learn, internalize that information and work with that. Guys, if you're here to just learn, please stop. Make sure this information sinks in you. Whether or not you're at that point right now in life, just make sure it sinks. And make sure you work with this information because this is actually information that it's vital. Unajua, the main thing that zinasumbua watu ka Nairobi, and not just in Nairobi, in Kenya, in everywhere, money, mapenzi. So make sure this information is sinking in you and make sure you also work with it, okay? Because this is very valuable information. I can't emphasize, please, this is very valuable information. So welcome to this video. Welcome to another episode of Nguna Esther. My name is Nguna Esther. If you're seeing me for the first time, please make sure that's the last time you're seeing me for the first time. It doesn't make sense. But if you're seeing me for the first time, my name is Nguna Esther and also the channel is called Nguna Esther. I teach on finance, on investing, on tax, and everything money. Welcome to this video. So in today's video, if you have watched, and if you haven't watched, please watch. I'm gonna link the video to this one. So in last week's video, I updated you on the changes that have happened when it comes to NSSF, when it comes to health insurance, and also affordable housing levy. Those are taxes in Kenya, in case you're hearing those words for the first time. And if you are hearing them for the first time, please reach out to me. I'll guide you very, very well. So I updated you on the changes that have come about due to the law being a new law coming through. So in today's video, I want to take you through a practical payslip, especially if you are self-employed or if you have employees, so that you can be able, with this time, sai cost of living iko unapata pesa inaenda tu kanapotea. So I can't emphasize enough how you need to budget beforehand, especially if your business is, if you're a startup, you're still, in that not breaking even point, or just as a business, you need to plan ahead, okay? And you need to put something. And today I want to take you through a practical payslip so that you can know how you're going to be, the amount. First of all, I'm going to be using just two amounts, but it's going to be very practical so that you can plan ahead for your employees. Ndio usikwange enemy na hiyo period ya 25th kuendelea kupanda juu. Unaingia tu kwa ofisi unaona watu wanakaa mang'ombe to you, and it's not because of their fault, because of how unprepared you are to just face or to go through that week. Of course, there are salaries, there are wages, and there are also now staff related costs, and these are now the statutories, and that's what I want you to plan ahead for, okay? So without further ado, let's get straight into the workings. So I'm going to be using two examples, and I'm going to assume that you have someone earning 40K and another one earning 100K. I just want for you to see the differences. Sorry, my shoes are coming off. So this is our gross pay. For two individuals. So individual one, I'm gonna call him King Solomon, King Solo, and for the second person, I'm gonna call her Waithera. Okay. So how I arrived at my gross pay, it's the basic salary plus all other allowances, including any allowance that you're given, ama you give your employee. It should come before this, so that you can now arrive at your gross pay. So here I'm working with a gross pay of 40K and 100K Kenya shillings, yeah? So after that, now we come to the first statutory. So I'm just gonna call them statutories. Statutories. Okay? And the first one is the health insurance. SHIF. Okay. SHIF, as you already know, How you know is that you watched my previous video, and I'm not even using it as a clickbait, guys. So SHIF is 2.75% of your gross salary. So in this case, I already have my numbers right here. So for King Solo right here, it's 1100, and for Waithera it is ini SHIF 2750. So you're already earning 40k. That's how much you contribute towards your health, the government health insurance. The second statutory is going to be now NSSF. Let me just call it pension. Okay, I'm going to call it pension because I'm going to factor in also the if your employer has a registered, or if you're an employer and you have a registered pension where you also match your employees' sacrifice towards their retirement. So for the first, so assuming you have a registered pension scheme going on, a pension, a provident scheme going on for you and your employees as an incentive to them. So I'm going to assume we're going to be using 5%, meaning your employee contributes 5% and also you match that 5%. So we're in our employees' tax return, the pay-as-you-earn monthly one. So 5% of 40k is going to be, 2,000. And for the lady earning, it's going to be 5,000. Hope you can see clearly. And then now NSSF. So this is what she has. This is what you have as an employee. This is what you contributed to the registered pension towards your retirement. It is not a statutory contributed to the government. No, it's a private pension. And then now we have the government pension, which is 6%. Already gave the calculations how we arrive at NSSF. So 6% of 40k is 2,400 for the employee part, and then 6% of 100k is 4,320. Okay, kumaanisha hii ndio pesa yenye unatoa unadidaktiwa inaenda kwa NSSF towards your retirement. So if we add both of them, this one is going to be 4,400, and for Waithera right here, this is going to be 9,320. Okay, so hiyo ndio pension yenye inatoka kwa mshahara towards pension, private pension, government pension. Sawa. Statutory number 3 is the affordable housing levy. This one is 1.5% of your gross salary. Okay, so for King Solo right here, I'm going to just match it right there. For King Solo earning 40k, affordable contribution is 600, and for Waithera, this is going to be 1,500. Tuko pamoja? So these are now the things that we deduct from this, yeah, to get what we will subject to pay as you earn. So when we get our taxable pay, or we need to get our taxable pay from that and from this, meaning it's 40k minus health insurance minus the pension minus the affordable housing levy. So we will have a taxable pay for King Solo. It's 33,900, and for Waithera right there it is 86,430. Okay, so now this is the amount we subject to the different rates of pay as you earn. So here I will talk to you about the rates in my inbox. So the pay as you earn that King Solo should be paying is 44 49. Let me just erase that. 49, 53, and for Waithera 20, 712. That is the pay as you earn, minus the normal relief anyone is accorded, any employee is accorded, 2,400 per person per month. So we find our net pay as you earn for King Solomon to be 25,53, and for the other lady 18,312. As an employer, however, this amount is not deducted from you. This is amount now that is deducted from their income straight up. Before pesa ingie kwa account yao, inatolewa so that it caters for their pay as you earn. So as an employer, now the employer's contributions. You have to match the NSSF and the housing levy, and then remember you also have the pension scheme, which is internal, yeah? And you definitely also have to pay for your employees, the NITA. This one is the employer who pays. So for 40K, he was matching 2,400. On this side, he was matching 4320, which is the rate that came. Inaonekana kweli? Which is the rate that came in Feb this year. And then for housing levy, he has to match 600 on this guy, and then he has to match 1,500 on the other guy. 1,500 for pension. For this one was 2K, and for the other one was 5K. Easy must. Hii hapa si must. Hizi tatu ndio must. For NITA, it's usually 50 bob per employee per month. So unapata that in this month now, he will pay 50-50 for guy 1, and he will pay 10,870. Hey guys, I hope these things are being seen. But you can also hear my sound, which is okay. So he will pay 50-50 times 70 for the two, 870, for the two guys. So you find that this employer B will pay 15,920 to cater for the staff related or payroll related statutories. I don't know if my writings can be seen, but anyway, we've arrived at the figure that I wanted. So this is what this person will pay for to cater for the staff-related statutories per month. So if you have such a figure, you find that you can be able to plan maybe for 3 months ahead, ama 2 months, so that isikuange ni stress, you don't find yourself penalties of filing late, paying late, you know. So to avoid that, please do have some emergency fund put aside where you can, with that, you can be able to find your figure and then multiply, at least have something for 2 months or 3 months, so that uwache kuwa na hizo, hata itax yako ukiangalia inakaa tu chafu, penalties and interest. So yeah, it's very simple, as you can see. In case something is unclear, please comment down below. I will also reach out to my WhatsApp. I have a number listed down there and my various social media platforms. So with that, I have come to the end of this video. It is my great hope that you have learned. If you haven't, you can always reach out, Imagine. But thank you so much for watching, and I'll see you in my next video. Bye. But before that, subscribe. Bye.